All right. Good morning, good afternoon, wherever you are. Maybe good evening as well for those in Asia. We're super excited to have our first analyst call for the year with our very own Adrian from the investment strategy team, as well as myself. Today, we're going to be your co-host. We're going to give you a rundown of what's going on in the market. I'm sure many of you have so many questions and we want to be respectful of your time. So we're going to get started incredibly soon. I'm going to be asking many questions to our very own Adrian and bounce back on all of the insights that we have to share with you guys. But we appreciate your time. There is almost 100 of you in this webinar. So we're grateful for that. Welcome everyone. Adrian, how are you doing?
I'm doing fantastic. Of course, there are a lot of jitters in the market, and I think it's our job today to dissect what's actually happening. Maybe a quick recap what happened over the last couple of weeks, maybe even months. See what the current market looks like, and then obviously a look into the future, potential catalysts, potential bear case scenarios, but I think it's going to be a good session over the next 20, 30 minutes.
Absolutely. It's already 8:31 in New York City. I'm calling from New York City. Adrian is calling from Zurich. So why don't we get started? So first things first, Adrian, you have to really tell us what is going on right now, and are we in a bear market?
I think that's a big overreaching question. Of course, maybe what's the definition of a bear market? Usually it's a sustained drawdown of 20 to 25% in Bitcoin. And obviously for altcoins, even worse, often 70 to 80%. Now, if we kind of look in the past, of course, we had a bunch of different bear markets, and usually they last in average around 12 months. But it remains to be seen if this is a short one or this is a longer one. And I think today we're trying to dissect that. Another big important level to watch, of course, is the 50-day weekly moving average, especially in a later cycle. When we cross that line, and we're not able to recapture it, it could also mark the beginning of a bear market. So long story short, I would say as of today, yes, we are in a bear market.
I think the question remains then for how long, right? So historically, to Adrian's point, we've seen long-term bear markets. And looking at historical data, they last about 2.5 years. And these are called cyclical bear markets. They usually happen 2 years after an amazing event with a Bitcoin monetary policy called the halving. And the halving happens when essentially half of the Bitcoin emitted on the network gets cut in two to get to basically 21 million Bitcoins in 2140. And that's why, of course, we're called 21 shares, if you guys didn't know that. So that's basically the cyclical and long-term bear markets, 2.5 years. So he gets 2.5 years to recover. And then there are shorter ones. And the shorter ones are incredibly volatile. They're highly correlated with essentially the geopolitical landscape or the microenvironment. And these ones takes about 3 months to recover. So basically, long story short, long-term, 2.5 years, short, 3 months. Adrian, do you think we are in a cyclical one or essentially in a short-term one?
I think it remains to be seen. I think later when we talk about the outlook, there are a lot of positive potential catalysts. But I think in the short term, especially until end of the year, we could see some more volatility and potential consolidations or even pullbacks.
Yeah, it makes sense. And I'm sure many of you must be asking yourself now, but what happened? Why we had bear markets in the past? And there were common factors where bear markets happened. The main one was excess speculation. Excess speculation with initial coin offerings, the equivalent of IPOs for tokens, when they get listed publicly and accessible to all the investors with internet connection, or in regulated venues. There was also NFTs, as you guys know, and then recently as well, of course, the meme coins mania that we've seen, especially on the Solana blockchain. And at some point, actually, the meme coin volumes was a majority of the Solana volume at some point, which I think showed again excess speculation. The second common factor also was essentially regulatory crackdowns, and we've seen that, for example, with the China ban in 2021, where essentially China completely deplatformed crypto, whether it's crypto trading and Bitcoin mining. And that's why we've seen the relocation from China to the US. The third point for common threads was also that oftentimes we've seen fraudulent activities, right? So I'm sure many of you have PTSD or remember what happened with FTX. So FTX was one of them, but like there were also over threads and common factors like FTX in the past as well. We've seen, for example, Silk Road, as well as over platforms that were conducting fraudulent activities. And then the last one was essentially hacks, right? And we've seen that with Mt. Gox, one of the largest, if not the largest crypto exchange at some point about 12 years ago. So these are the main ones that investors have to pay attention to. So Adrian, when it comes to these recent market conditions amongst hacks, frauds, excess speculation, as well as regulatory crackdowns, what was the cause or even the causes of the recent market drawdowns?
Yeah. I mean, of course, I would say the last 6 weeks haven't been easy in the crypto market, especially since October 10th.
Yeah.
I mean, if I would pin down one of the ones that you just mentioned, then it's definitely leverage in the system. I would say the majority of the drawdown is first macro driven, less on the structural or the fundamental value of crypto. But it was definitely the leverage in the system that kind of exacerbated the entire drawdown. And as we all remember, it kind of all started with Trump announcing tariffs on China late Friday night, which kind of triggered
100%, right? You were 100% tariffs.
100%, which is nuts. But of course, markets were already closed in the US. The only market open was the crypto market, and it basically led to almost 20 billion in liquidations, which is the biggest liquidation event in crypto history, and because of some Oracle mispricing, also in some order books, it was quite a violent move. At the same time, we also saw ETF outflows. I mean, since mid to late October until now, we seen over 3 billion in ETF outflows. But once again, I think the bigger problem was really leverage. And it's so fascinating to me. So, because even over the last couple of weeks, we've seen multiple days where we had 24-hour liquidations over 500 million. So you can see these kind of speculators also come back quite quickly, and it brings that volatility into the market.
So long story short, excess speculation was the main factor. But fundamentally, we haven't seen hacks or even regulatory crackdowns, given the fact that, of course, we have a more regulatory friendly environment, especially in the United States of America. So that makes sense. But when it comes to the asset class itself, there is Bitcoin with over 55% of the market cap, which is significant, right? Over $1 trillion asset. And then there is the rest. Right. So Adrian and I and the rest of the research team, 4 years ago, we actually pioneered a classification system similar to GICS for the stock market so that investors can make the difference of valuations, but also asset allocation between fintech, biotech, defense, and all the sectors. That was pioneered in the 90s by Standard & Poor. And we did the same for crypto assets because many investors ask, 21shares, rightfully so, or cryptocurrencies or currencies. All of them are trying to be the better Bitcoin, or they're actually something else. And as a matter of fact, crypto is so mature that there are so many sectors, like in the stock markets, with financial services, with media, with infrastructure, and what have you. So we actually launched this classification standard. It's called the Global Classification Standard, called GCCS. You can find that on our website. I invite everyone to check it out. We can also send links after this call if you want to learn more about it. So there is Bitcoin. My question to Adrian is, there is Bitcoin and then there is the rest of the market, but not all of them are trying to be the next Bitcoin. So they are not all currencies, they're not all the next gold. So tell us more about the dislocation that we've seen recently in the crypto markets. So right now, Bitcoin is down by 25%, 20 to 25% from the previous all-time high. But what about Ethereum? What about Solana? What about the rest of the market?
Absolutely. And I think here comes the question, have we been in a bear market for quite some time, actually? Because if we look at some of those altcoin projects, of course, Ethereum and Solana, they briefly touched new all-time highs, but in relative performance, they've been lacking behind Bitcoin quite significantly. And then there's other altcoins that, yeah, never even reached all-time highs, or they still over 80, 70% down from previous all-time highs from the previous cycle. I think what we're seeing is maturity, but also kind of a comeback to fundamentals. And that's why you mentioned the classification standard. I think going forward, it becomes more and more important to really look at the economic drivers of these projects. Also, revenue generation. I know we have a lot of projects that are implementing more economically sound concepts. They introducing revenue sharing. So these are all kind of things that investors would need to look at to make a clear assessment if they're actually viable investments. And I think it's a good thing. We always said, Eli and I, unfortunately, there is a lot of useless projects out there that don't really have a value proposition, maybe even over 99%, but it shouldn't overshadow the 1% that is really disrupting many, many industries and the entire financial industry as a whole. So I would say going forward, we will see a decorrelation within crypto and really the emergence of quality projects, which is a good thing in the long run, in my opinion.
So this is a return to fundamentals. When it comes to the recovery right now, we think this is short term for Bitcoin, but we believe that this is a K-shaped recovery. And a K-shaped recovery means that some of them will stay flat. And actually, as a matter of fact, when we look at the existing prices of some of these long tail assets, whether it's, for example, Ethereum or even Solana, they have some of them very strong fundamentals, higher user growth, more fintech companies using blockchain rails for tokenization, for payments, for remittances, and this is significant. And the reason is because the infrastructure today of blockchain technology moved from dial-up, where essentially it was taking ages to make a transaction, and the throughput was very limited, very similar to the internet in the early days, where it was taking ages to load a page. I'm sure some of you know, while the younger people probably not, and took the internet for granted. But now we are in the age of bandwidth. And bandwidth is essentially the mobile ubiquity economy that we know today, where essentially it's unacceptable if it takes more than 2 seconds to open up your WhatsApp application, for example. And this is the same for blockchain technology. We are now in the era of a high frequency, well, I would say higher throughputs. Actually, as a matter of fact, Ethereum, Solana, especially Solana, performs better than traditional payments rails, which is truly incredible, right? And I think we are going to see more and more companies using these rails. However, looking at the prices, the prices have not been catching up to the fundamentals. And it makes sense, especially in a bear market. But for the past 4 years, some assets have been flat, right? Except for Bitcoin. And when you look at November 2021 and November 2025, a lot of them are actually even down from the previous highs, significantly more than 50% or 70% down. It could be an entry point, no financial advice, of course. It could be an entry point, or it could be further down relocation into healthier valuations. But to Adrian's point, as value investors, investors have to pay attention to sales, revenue, earnings, and essentially use the metrics that we use in traditional finance to understand whether an asset is overvalued or underpriced. And I think price to sales ratio, for example, is something that investors have to pay attention to. So for example, Ethereum has a price to sales ratio of, if we look at the sales ratio, and the sales specifically is essentially the revenue that the blockchains are making through the transaction fees, right? So this is the main driver. And the price to sales ratio is about 200x for Ethereum, which is incredibly high. People could argue that there is a premium for an early stage upstart and the fact that this is disrupting traditional payment rails. But then for Solana, it's around 40 to 50x, right? So when we compare that to traditional assets, right, in equities, usually in AI, we are around 40, right? So certainly we could argue with Adrian that potentially, despite the fact that Ethereum came down, it could still be overvalued on a relative basis. But to your point, Adrian, I think it would depend on the market conditions, especially with what the Fed would do at the end of the year and next year, with end of quantitative tightening and the beginning of quantitative easing for next year. But we have yet to see for sure. But I would say fundamentally, despite the price drawdowns, nothing has changed. And actually, as a matter of fact, the fundamentals are stronger than ever. But we have yet to see the iPhone moment for crypto. I would say Polymarket is the closest, right? People are using Polymarket without realizing that this is on blockchain rails, which is exciting. But Adrian, tell us more about, I would say, the outlook. What are the risks? What are the catalysts? What are the opportunities?
Yeah. I mean, once again, we just talked a bit about the difference between altcoins and Bitcoin. Of course, for innovation platforms like Ethereum, Solana, there's a lot good things going on, especially in regards to innovation. Of course, if we look at the tokenization space, we now have over 35 billion in tokenized assets. We even had the start of tokenized equities, which also, I think, stand at around over half a billion already, and it's growing significantly. And then, of course, the stablecoin space. I mean, Tether, USDC, USDT, both are still at an all-time high. And we see also that the transaction volumes are picking up significantly. So there's real life adoption and real adoption happening. But of course, I think it will take a while until this is reflected in the price. So for the recovery, altcoins might struggle longer. For Bitcoin, I'm less concerned, I would say. Of course, there's a lot of good fundamentals as of today, but also some good potential catalysts. Institutional adoption is happening for Bitcoin. I think, especially looking at the latest 13F filings, for instance, we've seen that the Harvard Endowment increased their Bitcoin allocation. It's actually their biggest holding in their portfolio right now. And I think that's a testament to where we could head it going into the future, because they truly understand kind of this value proposition of a digital store of value. And that's also the reason, just looking at gold had a fantastic year. Peter Schiff is certainly happy, but I truly think that the catch-up trade will happen eventually. Just given, as you mentioned earlier, a lot of people expect global liquidity to increase even further. yes, in the short term, rate cuts are a bit uncertain. We went down from a 90% certainty for a December rate cut to 50 or below 50 even. So in the short term, I think this volatility remains. But going into 2026, obviously a lot of people and the market expects that this to pick up again.
And I think to your point, when it comes to the watershed moment for the Harvard University endowments to invest in
Yeah.
and having Bitcoin as the largest, at least publicly filed assets to invest in, to me, it's really a testament to value investing in this space, to the fact that there is, to your point, real institutional adoption. And this is the leading indicator to the catch-up trade of Bitcoin to gold, quite similar to what we've seen 5 years ago, when essentially gold and stocks, especially tech stocks, in a very different market condition, of course, because 5 years ago we had unprecedented levels of money coming in the economy to support, unfortunately, the COVID-19 pandemic. But essentially, we've seen a similar pattern as well. Of course, past performance is not indicative of future results, but we could expect definitely Bitcoin to have a better performance. It has been the best performing asset for the last 10 years. It has outperformed significantly, of course, gold and tech stocks. And we truly believe that this year has been quite unique. But I would say, though, that for the past 10 years, we had different market conditions. AI was not a thing. And most importantly, we had also low interest rates. So actually now is going to be a real test for Bitcoin and crypto assets as a whole to not be the main character anymore, and for asset allocators to think about, okay, now I have also crypto assets and AI is real. They're incredibly exciting use cases. And I think we are going to see more and more of that fight between Bitcoin and AI. But we believe that actually there is a combination. There are some exciting actually companies that are trying to merge AI technology to make it safer, to authenticate identity, and to authenticate even messages and deepfake. So I think there is a lot of combination and synergies between these two technologies. But as the world evolves, we're going to see also that new market condition where crypto may not always be the main character. And it feels like a middle child, at least for the last 2 years now.
It does. I mean, AI is the new shiny toy on the block. That's why, and yeah. Look at the Max 7 just outperforming basically everything else. And yeah, it really comes down for blockchain technology and for crypto. And as you said earlier, have its app moment, its iPhone moment, where we have real viable products. Of course, tokenization, stable coins, but also on the consumer-facing side. I hope we'll see more in 2026.
Yeah. So Adrian, I'm sure many investors have that in mind. I do also have this in mind. I want to ask you, what could be, without, of course, disclaimer, this is not financial advice, this is not legal advice or tax advice, but what could be the price of Bitcoin year end?
It's a tough question, obviously. I think there's
Let's
different.
have three scenarios. Let's have three scenarios so
Let's
that
have three
make your
scenarios. That's a good
life
point. Yeah.
easier. Let's make your life easier. All
Let's
right,
have
best case, base case, worst case.
yeah. So of course I look at a lot of charts, and that's how I draw kind of this range. I would say the best case scenario would that we push back to the 50-day moving average, weekly moving average, which sits at around 100K. If we break through that with dominance, then obviously we could return to the bull market earlier. But I would expect that this is quite a big resistance, and we might consolidate here for a bit. That's what I would say is the best case. The worst case, in my opinion, would be either the 200-day the 200 weekly moving average, which sits at around $55,000. And it coincides with the so-called realized price, which is more of an on-chain metric. And it's basically the aggregated break-even point of Bitcoin investors. But that would be the max pain scenario. I think the base case, and maybe that's my conclusion, maybe around that level right now. We see in the market, we're already at extreme fear. We might dip below 90K. And if, for instance, we look at Poly market, which is right more often than not, there's a over 30% chance that we end the year at around 85K.
And
What is your
30%,
take?
and I really appreciate that. And I think 30% is not incredibly high. We're not talking about 60% or 70%. That may increase, to Adrian's point, depending on the market conditions, depending on the geopolitical landscape. I don't know if
Yeah.
many of you have heard, but the US government has started to actually approve the sale of weapons to Taiwan. That may not make China incredibly happy about it. So that's a geopolitical risk that we need to pay attention to. And that's for another call. We don't need to dive deeper into the geopolitical landscape for now. But I think I would concur with what Adrian just said. And I think we have these three main scenarios of base case, 100K, where we consolidate for at least a couple of weeks, right? I think that's incredibly important that we have a sustained range around 100K for the best case scenario. Base case is 85, and then worst case 56. And to give you an historical context, so 3 years ago, when our research team put a phenomenal dashboard, real-time dashboard about FTX, we actually spotted ahead of time the collapse of FTX. And at that time, the realized price, so what Adrian just mentioned, the break-even point, because we can analyze the blockchain wallets and see at what point the investors bought Bitcoin on an aggregated basis to understand their break-even points. And at that time, it was around $15,000. So this indicator is actually incredibly good to understand the max pain of the worst case scenarios, right? So certainly I think around 56K makes sense because 3 years ago it was around 15, and actually the lowest price of Bitcoin was actually around that as well. But we're certainly not in the same conditions as FTX with unfortunately the worst fraud that we've seen in the 21st century, even beyond Enron. So we're not there. We've seen just excess speculation. And I think I would say Adrian and I are cautiously optimistic, given the fact that we pay incredibly close attention to the fundamentals. But I'm conscious of time. I know we have a few questions that we want to tackle.
Let's
And
do it.
I appreciate you guys coming to us with many questions. Okay, so the first one, let's go. So please, could you comment later on the optimistic comments made by Tom Lee in recent days regarding this being a super cycle and him not expecting further price falls, especially where you may disagree? So I think the worst investment advice that we've seen, not just in this century, but I think since the creation of the C Corp, to be honest with you guys, is this time is different. And we've heard about super cycles. So super cycles are essentially when the prices are not expected to significantly collapse as we've seen historically. But of course, no one has a crystal ball. So I would say personally, and that's my personal opinion, when people say this time is different, prices are never going to come down again, let's be mindful of that and be careful of these kind of comments. So I would personally disagree with that because of the fact that crypto is such an important asset class today in investors' portfolios that, of course, what's going on in the geopolitical landscape and at the macroeconomic level is going to impact the asset prices.
I think Tom Lee is just a phenomenal spokesperson as well. And I also disagree with him in the short term, but obviously zooming out in the long term, I do believe that, for instance, Bitcoin will go to 200,000. But there's a low probability that this will happen until the end of the year.
Definitely. Okay, great. So we answered this one. The other one is, please could you also comment on whether there is discrepancy currently with professional versus retail investors buying or selling right now? Also, what are your thoughts on Wells moving BTC into ETH? I think we've seen unprecedented levels of selling from wealthy Bitcoin investors that do have between $100 million and $1 billion in net worth, just in Bitcoin, of course. And it makes sense. People that bought Bitcoin 10, 15 years ago that were early in their 20s, today have more responsibilities to buy a property or getting married and what have you. This is going to be a natural cyclical pattern that we've seen for the last 15 years. Even the people that bought Bitcoin, for example, 5 years ago from 2020, were also selling significantly when Bitcoin reached new highs, right? And this is absolutely a normal pattern to see. So we're seeing that more and more on the blockchain. The good thing is that we can see that in real time. But to Adrian's points, that does not preclude the fact that Bitcoin has strong fundamentals and that in the future, we believe that it could catch up to the market cap of gold at some point, which is close today, I think, $25 trillion opportunity.
Absolutely. Maybe one thing to add here, and relating it a bit more to ETFs, because I hear this in a lot of times in the market. They think prices can't go down because we have traditional investors now. We have all those big asset managers launching ETFs, and of course ourselves as well. But that does mean there are outflows. Just looking at the behavior of the ETF flows, you clearly see when there's a risk off sentiment in the market, you'll also see outflows in ETFs. Of course, they open the gates for traditional investors, for institutional investors like Harvard, or other state sovereign funds, for instance. But it is not a reason why we couldn't see any further pullbacks.
Yeah, agree. And also the breakdown of retail versus institutional investors is also incredibly important to highlight here, right? I
Yeah.
think there are more retail flows in these ETFs than actually institutional, which shows that this is still the early innings, and there is a significant upside for this asset. Okay, the other point is, will Bitcoin ever be a hedge against market turmoil like gold? That makes us smile with Adrian because we literally saw that during the banking crisis of 2023. And I think, Adrian, you can maybe walk the audience through what happened 3 years ago.
Absolutely. I mean, we all remember when we had the downfall of Silicon Valley Bank or First Republic Bank, which was quite a shock to the US banking system. But on the back of that, we had a 40% rally of Bitcoin. So really, a lot of investors seen kind of Bitcoin as a hedge against, yeah, centralized control, against potential uncertainty in the market. So long story short, yes, but it will take time. I think for now, Bitcoin is still a risk-on asset with risk-off properties, but it will, of course, take some time until it really establishes itself as a, yeah, as something like gold, for instance. But just giving its properties, it absolutely has the characteristics of a digital store of value.
Bitcoin is scarce. Bitcoin is more divisible than gold, more accessible. You can send billions of dollars within a few minutes, and holding that in a USB key compared to billions of dollars worth of gold bars. So definitely in the digital age, Bitcoin is the better gold. And I think history and longevity is going to actually be a testament to that in the future. This is just
And
a,
it's
yeah, go ahead.
100%, but we also got to remember it's extremely liquid. It trades 24/7. So if anything happens on a Saturday night, the market expresses its feelings and sentiment in assets like Bitcoin as well. So I think in the short term, still risk on flavors, but long term, absolutely a risk off asset and a hedge against currency debasement.
I think eventually also Bitcoin and gold are going to be complementary
Yeah.
to each other in a portfolio. Not financial advice, of course, and subject to another conversation. But this is not either or, but it's more both. And And I think this is exactly what we've seen with the Harvard University allocation in the 13th. Another
Let me
question.
read the next one for you. May you please indicate which type of data, because I know you love data, Eli, which type of data is sustaining your thesis? Are you looking into any on-chain data? How about macro? What are the actual driving factors?
It's a great question. Thank you so much, Nicolas, for that. I hope you're still on the call. If you're not, this is going to be recorded and you can access that on YouTube eventually. But we're looking at the plethora of metrics that we care about. But I think as value investors, we're looking at the fundamentals. We're looking at the user growth. We're looking at the revenue of these different blockchains. At the macro level, we're looking at, of course, the ETF flows. We're looking at, most importantly, also the macro conditions with the Fed monetary policy stance. So these are the main metrics that we're looking at. And then more broadly into the market structure, we're looking at leverage. If there is excess liquidity, there is excess speculation, this could be an indication of liquidations, unfortunately. So it's a mix of on-chain data, off-chain data, and of course, market information as well. And then the last thing that we do incredibly well at 21shares is also off-market information. So getting information directly from the builders, from the investors, are really close to the market, so really close to the code to really understand also some of the technological risk as well.
And maybe another quick jab on some of the data that is out there. Once again, stablecoin supply is near at an all-time high. We have over 300 billion in stablecoins in circulation, which is massive. Tokenization keeps on growing, also at an all-time high, 35 billion. Crypto users globally at an all-time high and increasing. And also the institutional adoption or the access to institutional investment products, just like ETFs, also globally over 200 billion in crypto ETPs. So once again, fundamentally, there's a lot of good things happening right now.
Yeah, absolutely. Another question. Thank you for that, Aiden. So if Bitcoin were to fall even further, to what extent would this contradict the view that Bitcoin maximum drawdowns are becoming increasingly weaker? So we believe that Bitcoin is a less volatile asset, and you could see the volatility of Bitcoin being weaker than actually some of the tech stocks, even some of the mega seven stocks as well. However, of course, black swan events and unfortunately, macro events could also impact in the short term the price action of Bitcoin. But in the long run, we could see further highs. It doesn't mean that Bitcoin is a bulletproof asset against drawdowns. And I think no assets are bulletproof against drawdowns, to be could be quite honest. This is finance one-on-one. So let's be clear that yes, we could expect drawdowns, volatile ones. And there are multiple scenarios where that could happen, of course.
I love that because it comes up all the time once the volatility kicks in. And as you said, like short-term volatility shouldn't be confused with long-term structural changes in the volatility. And over the last over the last decade, we've seen that Bitcoin's volatility is trending down. And I think that's really important.
Yeah, absolutely. So regarding the iPhone moment, Adrian, how do
Hmm.
you view the significant increase in institutional players coming on board and wanting to tokenize?
And wanting to tokenize. So tokenization again.
Yeah.
Um, I think that's part of the iPhone moment. I think when we refer to the iPhone moment, what Eli and I are referring to is that people use blockchain rails, they use crypto on a daily basis without even questioning on what infrastructure it's being built on. And I think tokenization, the integration of stablecoins are perfect examples for that. I get that question a lot from investors. I personally think the future of crypto and blockchain is actually quite boring. I know because of the volatility in markets, it might look a bit crazy from the outside, but all that is being built here is financial infrastructure, better, faster, more efficient, cheaper financial infrastructure. And in the long run, it will blend into our existing traditional way of living. So anytime you send money to your friends, anytime you do a wire transfer to your family across the globe, whenever you buy a stock, it will all happen on chain, and you won't even notice it. So for now, we say tokenized equities, but at one point, we will just refer to it as equities. And I think that's kind of like the iPhone moment for me. What do you
I
think,
mean,
Eli?
it's very similar to the early days of the internet where we're talking about internet businesses or online businesses, or
Yeah.
even like when you and I were probably communicating, if we knew each other 20 years ago using MSN, we would say, "Hey, we're online. Are you online?" Right?
Yeah,
Do
yeah,
we
yeah, yeah.
say that now? We don't say that.
Electronic trading was the same. People said, "Yeah, it's electronic
Exactly.
trading now. Now it's just trading." But yeah, 100%.
For sure. And I think financial services, of course, is the first use case of Bitcoin and tokenization and payment rails. But we believe that there will be more use cases using blockchain rails. This is just the beginning. Um, if 20 years ago I told you to rent out your house to a stranger or go to a cab of a stranger without actually using a yellow cab in New York City, you would say no, you would not be confident about it. But now there are businesses that build and change the psyche of the users and ourselves so that we are comfortable using Airbnb and Uber. And I think eventually we are going to have use cases that we haven't thought about using those rails. And the best example today is Polymarket, right? People followed the elections last year directly on Polymarket, and the market was right rather than wrong compared to traditional media outlets, compared to CNN and the others. So I truly believe that we're going to see more use cases where blockchain technology will become invisible in the eyes of users, and I think this is the exciting part. Conscious of time, we have a few more questions. We appreciate the engagement, guys. So question from Susan. You mentioned the 19 to $20 billion liquidations in the immediate aftermath of Trump's tariffs comments mid-October, so October 10th, as you mentioned. Have the liquidations continued? If so, do you have any estimates of the numbers since then?
Um, I mean, of course, October 10th was kind of like the biggest liquidation event. And as I mentioned also during the call, there have been, especially over the last couple of weeks, several days where we had liquidations over 500 million. If you want to have the consolidated number since October 10th, I don't know. I would need to look it up. But I would say it might be creeping up to almost 30 billion that have been liquidated.
Yeah, yeah, I would agree with that. And I think it's to be continued, but we've seen the open interest coming down significantly. So the interest to speculate more as
Yeah.
people got instantly liquidated. And I think it has come down to the market sentiment that we're seeing today, which is extreme fear as investors are pulling away from excess leverage. Another question from Oliver. Thank you for that. Most of the time during the recent sell-off, Bitcoin funding rates remain positive. So no sign of a speculation, no sign of a speculation. Do we need that for a reversal, in your opinion? So the funding rate, long story short, is essentially a continuous futures contracts. And when it's positive, essentially it means that there is a lot more long speculation. And if it's negative, it's because there are more shorts, essentially, long story short. So do we need that reversal? Do we need to get to the negative space to basically come down with speculation?
Um, I would say the short answer is no, not necessarily.
Yeah.
It just needs to be low. So obviously, usually once there's a lot of greed in the market or euphoria, that's basically when you see funding rates spike up. But as of today, they're still slightly positive. Therefore, less leverage in the market, but they don't necessarily have to turn negative as an indication for further drawdowns.
Yeah, agree. Okay, another question is, do you think the strengthening correlation between Bitcoin and traditional finance is concerning development, given that Bitcoin was increasingly seen as a diversifier compared to other assets? Smile to our face. There is higher correlation, of course, in extreme fear. And I think it's conditional for Bitcoin. Bitcoin is both a risk-off and a risk-on asset. It's a Swiss knife, and I think it depends on market conditions. As Adrian mentioned, during the banking crisis in 2023, we've seen a decoupling of Bitcoin in the banking sector, as well as also the broader tech stock. And I think this is just conditional and short term, but longer term, we can see this lower correlation as well. And we have actually a report on portfolio allocation that we published like in 2019, so 6 years ago, that we always update on a yearly basis. So stay tuned for that for updated numbers. Okay. Other question. Wouldn't you say the well selling and sentimental selling, once finished, is a healthy washout on the market? So when wealthy Bitcoin investors sell, this is not really a washout, right? Like I think this is more of a personal decisions, unless they're getting liquidated. I think liquidations and wealthy Bitcoin investors selling it are two different things. So certainly the long liquidations, unfortunately, happened and people lost a lot of money. But for the wealthy Bitcoin investors, they've been around since Bitcoin was $1 or even a few cents, and now they want to sell a significant amount, a life-changing amount, for their families, right, or over personal matters. So I think the selling will always continue to happen, but I think it depends on the percentage of the selling pressure coming in from these
Hmm.
wealthy investors, right? I think this is on an aggregate a larger portion right now, but that may come down in the future. And I think when it goes down to less than 40%, 30% to 20% of the on-chain selling pressure, this is going to be a good and healthy balance.
I would agree on that. I think people are way too concerned about, and put yourself into the shoes of an early Bitcoin investor, and you hold, let's say, 1 billion in BTC.
Yes.
Does your life really change if you go from 1 billion to 1.5 billion? Very marginally, right? It's not a big
We're talking
change, I
about
would say.
$500 million. Come on.
Yeah, yeah, but still, I think your life doesn't improve significantly from
Yeah,
that point. So I
yeah.
think it's people always say, yeah, maybe they know something, maybe they lost conviction. I think it's natural and very human just to take profits. And I think what is being referred to here is also kind of a redistribution. So you have those kind of cluster and whale risks that are being removed, and Bitcoin is just going into the hands of a more distributed investor base.
I agree. And also, I would say that at the end of the day, if you go from $300 when you started with Bitcoin to then, 10, 11, 12 figures, I mean, these are life-changing amounts, and it makes sense for certain investors to take profits. And the second thing is because blockchain is transparent, we're able to see that in real time. But usually, when wealthy investors in the stock market sell, like no one would really know unless they are a hedge fund or a venture capital fund that do have to basically disclose their positions, and we see them in the 13Fs. But like we're seeing 13F in real time now, and I think that's why people react very instantly as well. But certainly, I think at some point privacy is going to be important for these wealthy investors. Oh, speaking of privacy, do you think that private blockchains will be the main new narratives where institutions want to take part of it? What do you think,
Yeah,
Adrian?
very good question. Very good question.
Yeah.
Very good question. Potentially, I would say privacy is a big narrative for 2026. We've already seen this with kind of like, just look at Zcash and the price performance here. Generally speaking, this concern about lack of privacy is kicking in and could fuel that narrative. If it's private blockchains, I'm not 100% sold on. We've seen private blockchains many years ago. We had Oracle, IBM. There were a bunch of different companies that launched private blockchains, but they never gained any traction because they were almost built like a silo, like an intranet. and you expect anyone to join your intranet. So I think the fundamental layer needs to be a public blockchain, and privacy needs to be built on top. I think that's how I would see the future of permission blockchains, so to speak.
I think this is the equivalent of like SOC 2 for,
Yeah.
people that do work in tech, right? To secure essentially anything that you do on public blockchains or the public internet, I would say. I think this is similar to what Adrian just mentioned. So you're using the public infrastructure. Today, Adrian and I and you guys are joining the Zoom call, but no one knows about TCP/IP. And let me tell you, if this is new to you, and this is making me smile because in the future, people are not going to know about the underlying blockchain rails. So TCP/IP is the internet protocol that makes this connection possible for us to communicate with different devices. And this is incredibly powerful, right? And then we have applications on top like Zoom that allow us to basically use this public internet to have essentially a business activity like we have today. So this is what we're going to see in the future as well, where blockchains are going to be similar to internet protocols, and people are going to be using applications where the rails are going to be invisible to them to be able to interact, communicate, and make payments. And eventually, I think privacy is going to be key as well to protect consumers, to protect, for example, even activists that do have to disclose a authoritarian regime in places like North Korea and what have you. Privacy is going to be key for sure. Which blockchain, which coins, I think we have to do a lot more research on that and stay tuned for this. Okay, so finally, could you comment on the way in which cold storage works at 21shares and why 21shares offers great way of exposure for retail clients?
Yeah, I mean, I don't want to go. This today is not a product pitch, but obviously 21shares stands for easy access to crypto. And how we do this is via a offering of ETPs and ETFs. In regards to the storage and the custody, we work together with institutional grade custodians, a diversified range of those custodians, which basically means they safeguard those assets completely ring fenced away from us as an issuer. All coins are 100% physically backed, and they're always in cold storage. And therefore, it's, we're trying to provide the highest and most sophisticated amount of security for our investors.
Yeah, absolutely. And of course, if you guys want to have more information, our website is also available for you within your jurisdictions to be able to access the necessary information. No financial advice, of course. So does it still make sense to hold bold and continue to increase holdings? So this is a question from German Carlin. Thank you for that. And I think we're very happy to have a one-on-one discussion with you about specifically our product that combines both Bitcoin and gold, called Bold. But of course, we are not talking about specific products here, but we would love to have a one-on-one conversation with you to continue further on that.
But we have to point out that the performance has been phenomenal. Just combining, a lot of people always say Bitcoin versus gold. Bitcoin is a better gold.
They are US investors, so we're not
Yeah,
allowed to talk about
yeah. But I'm just saying the combination of both, without mentioning any products, is a strong duo. And that's why, yes.
Yeah, but Adrian, we need to reach out to German Colin after this.
Will do. All right.
Okay, last few questions, guys. Let's take the
I
next.
love it. We got so many
We have so
questions.
many questions. Okay, so outside the world of investing, what are the other exciting developments you're watching in the crypto space? I would say probably prediction markets is the most exciting ones, and actually
Yeah,
has become part of our research workflows to understand
exactly.
where the market is headed and how investors should position themselves within the different events that could happen in the
I
world.
mean, I'm a massive UFC fan, so obviously I'm very excited about Polymarket these days. So yeah, prediction markets, definitely a thumbs up.
Yeah. Another question from Marcel. Is there a BTC price level where the big BTC treasury companies like MicroStrategy would get into serious trouble and speed up the drawdown? Great question. Um, I think the max pain on chain that we're seeing right now is $56,000. That could really get us to extreme fear, even bigger than what we've seen today. I think that would be the price point that I would pay attention to.
It's a
$56,000.
It's a very nuanced question. I think here we always have all eyes on MicroStrategy because, of course, they by far hold the most BTC. But I think MicroStrategy has it, they have it figured out. I think if we see a massive drawdown, they will hold the strongest. Reason being, they have the strongest capital structure. All the shareholders are aligned, and they have very good average entry price, which is around 74K. Which doesn't mean if it dips below that they automatically have to sell, because it really depends on how they bought those Bitcoin in the first place, meaning what capital structure is. Is it mixed and raised via equity versus debt? Of course, there's many other digital asset treasury companies that at a certain point could experience some stress. And I think 2026, we potentially could see some consolidations here. But as of today, I wouldn't be as concerned.
Yeah, I agree. If all's gonna be happening on chain, why isn't this priced in? Shouldn't this imply immense upside potential that should be priced in? I don't think this is priced in. I think no one really priced in Airbnb, Uber, and other applications that we think about. I mean, honestly, if you thought about ChatGPT in the 90s, congratulations, because you should have definitely invested in NVIDIA very early on in 1994 or 1998 when they became public. But I would say no, not everything is priced in because people don't always have the imaginations of how they could be using blockchain technology. So there is a surprising moment that could happen. No one thought about the App Store and other applications that we're using and taking for granted today. So not everything is priced in now. Okay, normally there is a strong correlation between BTC and the Nasdaq to observe. Just recently, however, there has been a change in correlation. Is it a good thing for crypto or a bad thing going forward? I think, as we mentioned, this is a momentary higher correlation that would come down to the historical average of 0.2, so 20%. And this is going to be a regression to the mean, as we like to say in statistics. Okay, another question from Sebastiano. Do you still believe that traditional 4-year Bitcoin cycle is intact, or has institutional adoption tempered the reflexivity that used to drive it? Adrian, what do you think?
I would say
Are we in a super cycle?
we're not in a super cycle. I would say, I mean, that's a big question, obviously. I think the 4-year cycle is broken to some extent. I think the halving as an event, as a monetary policy impact, will have less of an effect going forward. I mean, if there's cycles that Bitcoin is following, I would say it's more economic cycles and liquidity cycles. So looking, for instance, at the global economy index, we can see basically that we're still at the early stage of an expansion phase, and therefore it could, yeah, it will follow something like that.
Yeah, yeah, absolutely. Okay, another question from Nicola. Thank you for this. Does any other recent developments in the Bitcoin
Ah.
course, the software of Bitcoin, the code, even the politics related to the Bitcoin community, miners versus users, payments only versus applications concern you? Does it affect the price action on any way? Adrian, what do you think?
It is a good question. It's a very good question. I mean, in a worst case, it could lead to a Bitcoin fork, I would say, if that's what he's referring to,
Yeah.
which is a possibility, and it's always been. But in regards to Bitcoin Core, I think in the end it's just it's not controlled by any centralized entity. In the end, it's still a decision of the community, the miners, and the consensus.
I would add though that there are two school of thoughts, right? So A, we have the innovators that do want to
Yeah,
have applications like we see on Ethereum and Solana, and then B, we do have the conservatives. It feels like almost like the left and the right in America or any other geographies around the world. This is human nature, and human nature doesn't change in any circumstances. So I would say though, I think this is definitely a development to watch, but this is not affecting how Bitcoin works or the uptime. Bitcoin is
it's
still
true.
working, and this is incredibly exciting to see. I think the evolution of Bitcoin as not just digital gold, but also as the App Store eventually trying to compete against Solana, Ethereum, and the others is going to be interesting to keep an eye on. It's similar to how businesses like Amazon move from just being a bookstore online to then actually providing cloud storage services, and of course having AI and space and stuff like that. So I think this is a natural evolution of the total addressable market for Bitcoin as well, which is exciting. Another question is following the above, do you think Canton Network is a better solution? I think first let's start with what's Canton, and then do you think it's a better solution?
I mean, Canton, I would say, is a blockchain that basically con combines the benefits of a public blockchain with privacy and is really purpose-built for tokenization, stable coins, and so on.
Yeah.
So is it a viable solution? Potentially, potentially. I mean, I could see larger institutions kind of wanting to build on something like a permission, almost a permission blockchain. We've seen some early approaches by, for instance, Avalanche, that, in my opinion, works similar but comes from a different route. And just given the strong team they have behind, and the people that are building already. Yeah, I do see some potential, but it's still very, very early. What do you think?
It's still early stage. I would agree with that. I think this is an interesting development of a network of networks. So essentially a public network that can have private networks on top, similar to Avalanche subnets. Privacy is incredibly important for market integrity and consumer protection. And I think compliance is going to be key for institutions to be able to use these blockchain rails. It's also a blockchain as a service blockchain. So essentially they don't have to hire blockchain engineers and the key people to basically maintain the infrastructure. It's almost like a toolkit that is fully available, fully fledged. So quite interesting. Kenton reportedly has over $500 billion in tokenized assets, at least
Mm,
40 tokenized assets, which is significant. Of course, that makes it the largest tokenization platform by assets. This is self-reported. This is not on-chain, as you can verify, of course, on Ethereum, Solana, and the others, but that's a significant number. So definitely a product to keep an eye on. All right, with that, Adrian, we finalized the 20 plus questions that many people had. We still
and
have
right on time,
over,
2 minutes late,
right?
but I think that's
Almost
fine.
almost right on time, but we are incredibly grateful of your time, guys. Adrian, thank you so much for the insightful information and
Thank you for being
not
back, Eli. It's been a
not financial
pleasure.
advice, not financial advice, no legal advice, no tax advice, but we truly appreciate your time. This is recorded, so this will be available in our channels. Feel free to also follow us on YouTube, on Twitter, on LinkedIn, and check out our website for new research. And most importantly, one last thing, sign up for our investor letter as well on our website at 21shares.com. Adrian, thank you so much,
Thank you.
and speak soon. Thank you,
Enjoy the
guys.
ride.
Enjoy the ride, guys.
Bye
Stay
bye.
safe. Bye bye.